else sees going forward. You're used to getting updates like these from maybe Chris or somebody like that. This is actually a little bit more in the weeds. Tom's pretty in the weeds. So if you all help me welcome. Mr. Siomades, don't disappoint us now. I said you spoke our language.
Okay. Everybody hear me okay? So I'm Tom Siomades. I am the Chief Market Economist. Prior to that, I was the Chief Investment Officer. I joined the AE in 2019. I've got about 35 years of doing this type of stuff, whether it be trading, portfolio management, model building, client outreach, pretty much everything that you could imagine having done in the investment business I've done. What's interesting is that I kind of like doing all these type of things, and as I got further on in my career, people were trying to pigeonhole me that you should be a head of research, or you should be a head of portfolio management, you should run a trading desk. And I didn't like that, right? So I found AE, which is really fortuitous, because I would have thought that in order for me to do the thing I want to do, I would have had to end up in some place like Chicago or Boston or New York, and it just didn't work that way for me. So I found AE, which was we're about a $35 billion all-in asset-wise RIA, which is a registered investment advisor. And we started out in 2016, so a little less than 10 years ago. We only had $500 million. So we've grown phenomenally in the past 10 years. But we're also part of a company called Advisors Excel, which does other things like insurance and annuities. And you probably have some of these folks who probably have some of the annuity or insurance providers sitting now. We're about 1,000 people. We're headquartered in Topeka, Kansas, which is kind of weird because I'm from New York City, so people heard Topeka, Kansas. I didn't know anything other than the dog, Toto, and Dorothy. And actually, there's a really good museum in a place called Wamego, which is the Wizard of Oz Museum. Ask me how I know, because that was the only place that was open during the pandemic. So we drove 3.5 hours and checked that out. But so that's all I knew of Kansas. But what was neat about it was they really just wanted someone that could help build things from the ground up, right? And when you guys came over as clients, and Adam and his team, we're pretty selective. We don't have a lot of advisors we work with because we have a very advisor/client-centric approach. You're not going to get lost in the numbers or in the paperwork when it comes to like you would Fidelity or Ed Jones or something like that. You're not a number to us. A lot of our folks not only view the advisors as clients of ours, and by extension you guys as well. They literally do stuff with them, family. Like they've been going on these advisor retreats and things like that, and they really get to know their families, and they get to know a lot about their personal situations. By extension, that helps us service them better, and then they can service you better. So all the stuff that you guys have, again, I don't know the details of the transition because I'm not really involved in that side of things. But what basically happened is you guys have been positioned in a way that your advisors can do what they're supposed to do, which is advise you guys, right? Not fiddle around with billing and back office nonsense and statements and all that mumbo jumbo, which takes a lot of time because there's a lot of things that need to be done. And that's time taken away from them working with you directly. So I think from my experience, like I said, we're very selective about who we pick to work with as far as advisors go. But at the same time, that pickiness, if you will, gives us the opportunity to be really, really excellent in the service we provide for you guys. So ultimately, the advisors need that. So that's the relationship. Okay, so back to me, my favorite subject. So, as I said, I moved to Kansas in 2019. I live in a place called Leawood. Anybody ever been to the Kansas City area? You guys know where Leawood is? Right on the border with Missouri. You come out of my house, you take a left, you go a quarter mile, you're in the border country, which is perfectly fine because I'm a sketchy sneaky little dude, so I kind of like moving between the borders. No, I'm only kidding. Anyway, I have a wife. We've been married 38 years. Best friend, best decision, best everything I could hope for. 2 kids, a son and a daughter. She's 24. She's a geologist. She went to Penn State and is now working at KU, getting her master's. Really frustrated her because every time we're in the car, I point to every single rock on the side of the road and I ask her what that is. She's like, Dad, I don't know. I said, well, where the hell they spend all that money sending me to Penn State? We have fun. My son is a junior, finishing up his junior year at West Point right now. He's not enjoying the experience, although I tell him it was a fantastic place when I was there. I don't know what he did to it to ruin it. Why he's so miserable, because, it was the old Grant saying, right? I grow more and more fond of West Point the longer I'm away from it, right? So that's kind of me looking at it through my 40 years ago lens, but, he's not a happy camper. I have a dog that's 15. She's a Papillon. If you guys are familiar with those, it's like a small spaniel. Missing all her teeth, so she literally is all bark and no bite. A cat who's on his last legs and barely can do anything except scratch stuff, which pisses me off. And I should have brought the lizard that my son left us when he went off to West Point. I could have released him down here and things. So that's the long and short of it. So let's talk about the markets, okay? I know not a lot's been going on, and I know that things have been kind of quiet since the beginning of the year. And everyone's just like, what the hell is this guy doing here today talking about the market? Because there's nothing to be learned. Well, there is. This is going back to 1970, okay? This is just a list. It's not important that you guys can read that because the type is kind of small, but it literally shows every one of those little lines is some kind of crisis. So, newsflash, there's always some kind of crisis all the time. Okay, whether it's the financial crisis or us pulling out of Vietnam or the 9/11 or there's always something going on. What's important for you guys to remember and kind of visually imprint is the dark blue of that chart is what the S&P has done in all that time. Okay, when I got into this business in 1990, 91, the S&P was trading at like 350. Okay? It's at 5,400 right now, okay? What that graph tells me is despite all the ups and downs and the sideways and the ins and the outs, what does the market do? It moves forward. Okay, and I'll show you another graph later on that or a chart that shows that numerically demonstrates that. But my point is, if the market was a loser's game, people wouldn't invest. You wouldn't see the market go up, right? So you have to understand that the way you win in the markets is being patient and sticking to your plan. Okay. What I haven't seen, and this is a new one because they have been tracking this since back in 1997, is see how there's nothing going on? This is trade uncertainty. The first time we saw any kind of spike in trade uncertainty was back with the pandemic. And you guys remember there was the ships that were like parked off the shore, and everyone's hoarding toilet paper and all that kind of crazy stuff, right? Who still has toilet paper? I do. So check this out. Remember last year, toward the end of last year, we had the, what was it? There was going to be a dock strike. Remember that? There was going to be a dock strike. And so my wife calls me up from Costco and she's like, hey, toilet paper's down. I didn't even know we imported toilet paper. I don't think we did, but maybe that's a logical response to people that they're not going to get Mercedes-Benz parts and French wine, but we need to have toilet paper. Anywho, as you can see where the red dot is right now, something happened come the beginning of January with respect to trade uncertainty. And that was that Donald Trump got elected. He said it all along during the election. And said, look it, you know what? We've been getting ripped off, and we need to balance trade out and make it more fair. Okay. Maybe true, maybe not. I mean, it depends on, there's a lot of perspectives on this, but hey, the guy said he was going to do it, and anyway, he did it. So as soon as he did it, guess what? Trade uncertainty shot up, right? Okay, so what's interesting is where do we get all our stuff from? What are the colors that are most prevalent up there that you guys see? Red and green, right? Surprise, surprise, Canada, Mexico. Okay? Those are our biggest trading partners. Those are the most meaningful ones for us. and for them. China's not that big a deal, and I'll show you that in a second. But at the end of the day, you know, the first thing he did was he went after Canada and Mexico because he thought that they were going to soften, and he wanted to get a new deal. Okay, even though he negotiated the last one, I guess he didn't like it so much, so he needed to negotiate a new one. But you know, a lot of they kind of fell in line, right? They lowered some, they put some soldiers on the border to prevent, you know, illegal immigration and stuff. They stopped some of the drug trafficking that was going on. And then initially we were told that this whole like tariff thing was about being it wasn't a trade war, it was a drug war. We're going to stop the illegal migrations and we were going to stop it. They kind of did that, and then, you know, I guess it did turn into a trade war after all. Actually, interesting fact, the second when Trump came out with his big like board and looked at the menu board for everyone's options, and as far as tariffs go, we were going to reciprocate with it. I was in Canada, so I was a little nervous. I didn't think they were going to let me back in the country. Let me leave. Okay, so if you look, the two blue lines on this chart right here, that's the amount of exports that China, well, the red line is China, but Mexico and Canada, that's the amount of their exports to our country. So them exporting to us as China is significant to them. But if you look at our exports back, the only ones, the same blue lines, which is Canada and Mexico, you know, so there seems to be some reciprocity going on. We send a lot to them and they get a lot from us. China doesn't get anything from them. So if you look at like where they are right here, that's why I think they really need us way more than we need them. So that's kind of what I think at the end of the day what's happening is he just stirred up this big pot. If he gets a better deal, great. It's better than what we had. But at the end of the day, it's really more about, in my opinion, more about putting China in this place because they've taken advantage of the trading structure for quite a while now, ever since they went into the World Trade Organization in the early 2000s. Okay. So, you know, we had a lot of talk about tariff revenue, right? A lot of tariffs. The tariffs, you know, we're going to get rid of income taxes. We're going to, you know, we're going to fund the government with tariffs. Maybe if it was 1815, when we were having the, you know, War of 1812. Tariffs were a big deal, but if you can see, tariffs have been progressively dropping, right? To where basically about 1950 they flattened out. Do you guys know what was going on in 1950? Why tariffs went to zero and why we opened up our doors and threw our arms open to the rest of the world to sell us stuff? World War II was over. Korean War was going on, but what was the nexus of the Korean War? No, it was the Cold War, is what it was, right? So we had two conflicting ideologies in the world, and starting about 1946 and the Korean War and all that. One was the Russians and the Soviets, and the other side, we all grew up with this, right? Remember ducking high under the table? We were going to be a nuclear war, World War III, and all that stuff. So what we did was, as part of our foreign policy, is we made it really, really easy for people to ship stuff to us. We wanted them to do business with us. And the way I explain it to people is there's two competing bars on each coin. One bar has happy hour, ladies' night, drink specials, there's all kinds of stuff going on. Everybody wants to go to that bar, it's cool. The other bar across the street has one brand of beer, they close at 4 o'clock, they're not open Saturdays. Okay, which bar are you gonna go to?
Hey.
The good bar, right? So when we put the Russian bar out of business, there was really no need for this anymore, but the structure was left in place, right? That trading accommodation was left in place, and a lot of people started to use those loopholes. They started saying, listen, we don't want your American crap in our country, but we want to sell you our crap, and we'll charge you tariffs. And we became basically not a export balanced country, we became more of a consumer country. And you know, we spend like crazy. Let's admit it, folks. We spend like drunken sailors on everything, right? We continue to spend. We're very consumer oriented, and that's a beautiful place for these countries that want to sell their stuff. So they exported their stuff to us because it was easy to do. They restricted us from taking their stuff, or they didn't take our stuff in. And at the end of the day, they devalued their currency. You know, but China was the most egregious one. They devalue their currency, they cheat, they steal our intellectual property, they don't, you know, They don't allow us to have businesses over there, and I think, at some point in time, it got under certain people's bonnets, and Trump predominantly was one of them. Okay, so the other thing that's going on in the country, it's more, I think, more treacherous for us right now to negotiate. It's not really the trade stuff. The trade stuff you could work out, but our government, we talked a minute ago about how much we spend. Our government spends like crazy. There's no reason why spending is up from 2019 by 60%. Our population hasn't increased, right? But then for whatever reason, we can't lower spending back to 2019 levels. And this thing has been going up like crazy. And remember, the government doesn't produce anything. It's a user of capital. Every dollar the government takes in is money that someone else could have used to do something else and generate economic activity, okay? I'm not gonna, relate the obvious, but no one knows better how you spend your money than you do, right? Why do we need the government for that? But yet the government has become this behemoth, and it continues to spend money. And the challenge now is, the real peril, in my opinion, to our economy and our way of life is that $36 trillion in debt that we're slugging around. Okay, that's an awful lot of money to owe. And yeah, we could correct things with our trading partners and even things out a little bit, but if we can't govern ourselves and we spend like crazy and run up our credit cards and take out loans, why are we expecting the same from the government? Because the government is just a reflection of us. Okay. Recession, right? We hear talk of recession all the time. People keep talking about, recession fears, whatever. Okay. These are the last two recessions that we had. And if you look, no, actually, I'm sorry. This is the last recession that you look. When you look at what we're supposed to have a recession, that the second one kind of didn't count. I don't know what happened to the prior recession, but it never happened, even though it did happen. I'm an economist, I'm not a fortune teller, I have no idea why somebody would have would say that the definition of a recession is two negative growth quarters and then we don't count it. But if you guys look at the last recession that we had, around the pandemic, nobody was predicting anything, right? They're always like around 25 to 30%. Right? So I don't know what 25 to 30% looks like to you guys, but my personal recession goes as follows. It's I'm either 100% my personal economy, like I got a job, I can pay my bills and I'm living okay, or I'm zero, I don't have a job, right? So I don't know who these guys are that come up with these recession things, but I wouldn't worry about it because I think they've been right, I confuse myself with how to try to explain it, but it's basically along the lines of 5 out of every 4 dentists get recessions right. Okay? They never do, right? They always come out with nonsense, right? They're like, we're going to have a recession. And then all of a sudden, we don't. And then they're like, so that's something you need to not worry about. But I think anytime there's any kind of turmoil that occurs in the markets, per se, and anytime there's any kind of ripple in the pond, you get the inflation or the recession people come jumping in. Okay. What is kind of troubling to me is this is consumer and business sentiment, and it's continued to decline because people are just not confident. And the reason that is because the world's always ending. Have you guys ever noticed that? Every time you turn on the TV, it's the end of the world, it's this and that, and it goes on and on and on and on. In reality, the world did end when Carol Channing died. But there was a lost treasure. I don't know how that one got out there. The compliance people put that one in there. She had nothing to do with the end of the world. But look, it seems like, I don't know how Time Magazine actually honestly exists, because there's always a problem. And herein lies one of the lessons for today, I think. There are problems out there all the time if you look for them, okay? And a lot of people thrive on the fact that there are problems out there. They put you in a bad place mentally, they put you in a bad place emotionally, and you make bad decisions. Remember our parents used to say, nothing good happens after 10 o'clock? Nothing good happens if you watch more than 15 minutes of news on TV. Right? The consumer and all of us have been beat up with all this negativity. The tariffs are going to make things go up, and the government's going to default, and Social Security is going to go away. Yeah, if you get beat over the head you're gonna believe that inflation is gonna go up constantly, and you're gonna have a crappy attitude, which is what the sentiment is, right? And that's kind of where we are. And what's fearful for me is, all of this is soft data, okay? What they consider, kind of feelings in economics, as opposed to hard things like unemployment and GDP growth and things like that. The challenge here is that, if you start feeling like crap, chances are you're gonna start actually feeling the reality is gonna come to it. It's self-fulfilling prophecy. It's gonna happen. If you feel bad things are gonna happen. And that's what we're doing, because we constantly manufacture crises and put people in the state of panic, and what ends up happening is you do the wrong thing at the wrong time. Okay? Okay, so this is an interesting one that's kind of getting towards the concept of more soft data going into hard data. If you look, you start seeing that our credit cards, which is this right here, is starting to, defaults are starting to tick up, which is not a good thing. Because it basically says, listen, we're not learning our lesson, we've blown through our savings, we're still using credit cards, and why would you want to use credit cards at a time when interest rates are high? Does anyone know what the average rate is for credit cards these days? 24%? I mean, probably you guys are a lot better at dealing with that, but you look at young people. They're out there, they don't know the difference between what a cup of coffee should cost, so they're okay paying $8 for a cup of coffee to start. Anyway, this one's interesting too. This part is about to end here. These are defaults on student loans. Okay, so you notice they dropped down during the pandemic as they delayed or deferred them, and now this party's going to end. But you look at it and you think to yourself, the things that are the most, the canaries in the coal mine are credit card debt. That's the first thing, and usually auto. So that's worrisome to me at this point. Okay. Here's another one of the 4 out of 5 people predicted recession deals. Remember they kept on talking about an inverted yield curve? Did you hear that at all? Well, let me explain the concept real quick for folks that are not familiar with it. So you always want longer term rates to be higher than shorter term rates. Why? Because when you are going to tie money up for a longer period of time, right, you want a higher rate because it's that much time that money is going to be tied up. You want lower interest rates for shorter term. So what happened when the rates inverted, and specifically we're talking about the 2-year and the 10-year, basically the rate on the 2-year was higher than it was on the 10-year, which basically was telling people that, listen, I don't trust things to go out 10 years and tie up my money. I'd rather just tie it up for the shorter term. And that's supposed to be a signal of a lack of confidence in the economy and the growth of the economy. Well, we've had that for about the last 3 years, and it's finally decoupled, and we're back to a normal rate curve now. So that was another one of those false recession indicators that never came to be. Okay? So we're kind of like, are we there? 1 foot in, 1 foot out. It depends on what you look at. But I think my biggest fear right now is that we're emotionally in a recession, and we're going to put us in that place. Because I saw Dan Rather do it in the 2000s when he'd get on every night at 6 o'clock news and whine about the economy, and next thing you know, we had a recession. So we don't want to do that. Okay, there's a lot of money sitting on the sidelines. We can talk about, people not sticking to their plan and cashing out. Like my father-in-law, bless his soul, cashed out, and he never let me forget 2008. Just before the financial crisis. You don't know what you're talking about. He was a machinist, and he worked at Pratt Whitney, and he took all his money out and he cashed it out. And he's like, I'm just a dumb machinist. You tell me, and you're the smarty pants, West Point graduate, investment guy. Look at me. I avoided the big downturn. But you know what he didn't do? He didn't get back in. Mm-hmm. And since then, the market went up like fourfold. So there's a lot of cash right now that's sitting here waiting for what? I've showed you the chart back at the beginning that the market's open biased. What are you waiting for? You're waiting not to make money, is my opinion. So I think as soon as we get a little bit more certainty in the market, I think a lot of this money, this dry powder, hopefully comes back in the market and pushes upward. Housing, for example. Okay, think about this is housing net worth, but one of the reasons why people don't feel as badly this time around with the market that's doing what it's doing is our houses are worth a lot of money. How many folks have been here more than 5 years? You guys remember what it was like when we first came down here, right before the pandemic? You had an affordable home, and life was pretty, I'd say expensive, but it was a lot different than it is today. So a lot of the money that a lot of the net worth that households feel is tied up in their home equity, and you haven't seen home equities really take a hit yet because you haven't seen people lose jobs yet, right? Because there's nothing that makes homes more available than people who can't pay their mortgage, right? So that's another reason why we kind of hung in there so far. Here's another one metric. Who's done some traveling lately? I go to the airport practically every week to do these kind of things. And if we're going to recession, folks, people are going down in flames because they're spending every flip and last dime, every plane. Like the minute I make a reservation, guess what happens? I get an email from the airline. Are your plans flexible? And I'm like, no, that's why they're called planes. But every single plane I'm on, this was last year, record air travel. Every single plane, and this is so far this year, every single plane I'm on is crowded. They might as well put it on loop. I don't know why they even tell you on the microphone. They should just hit a recorder and say, ladies and gentlemen, we have a completely full flight. And you need to check your bag if you're in group 7 and above. But something's going on, and flights aren't cheap. Okay, to come down here, I think it was like $500. Kansas City to Fort Myers. That doesn't seem like a very exotic trip. $500. Okay, so there's another example of why I don't think a recession is coming. Yeah, so we worry about stuff. We worry about a lot of stuff. We worry about our kids. We worry about our family. We worry about our health. We worry about the world. We worry about our investments. But one of the things we worry about a lot is, what if the market really just blows up? What if the market goes down between 20 and 40%? Oh my God. Okay. This is since 1937. Okay. It's happened 4 times. So we worry about, this is the thing that I was talking about with my father, right? He's worried about the bad thing happening and he avoided it. But the fact of it is, the market is up 75% of the time. That was that big, huge mountain chart that you see. 75% of the time. People are familiar with any baseball geeks in here? So how many players are in the Hall of Fame that have batted .750? There you go. Nobody. Okay, I think Ted Williams is in there. It's the highest ever, or maybe Ty Cobb, or whatever. Just barely over 400. That's a loser, right? I mean, that's below 50%. He failed more than he won, right? The market's 75% of the time is going to win. It's up 75% of the time. Why would you turn your back on that? And the reason is because, like I said, the market is a forward-looking mechanism. Okay, if you're going to win more times, then you're going to lose. If not, then it becomes Las Vegas, and we don't want that. So think about it. 75% of the time you're winning through all those crises. Okay? My dad, he was scared about this. But guess what? He missed out on that. So, we didn't talk much about the market. A few years after that, he miraculously got really quiet. All right. So, but here's what you need to understand. Okay, what we've experienced the past couple of years is not normal. Okay, please understand, it's not normal. We're not meant to get 20% a year. That's not how it works. For the last 2 years, we've gotten kind of spoiled. There was very little volatility. It was pretty chill. Markets just kind of did their thing and went up 20% a year. And we thought that was, people get lulled, right? Because they're always used to their current state of things. What you need to understand is with rates where they are right now, there's some options. You can go out and get a treasury or a CD and get 4%, 5%. That's real money that you don't have to put at risk. Well, so that takes money out of the stock market. But at the same time, stocks average anywhere between 7 and 9% a year. And I would also go down probably on record, you know, maybe if you guys have me back sometime, in January, you guys could hang it on me, but I still think we have a possibility of turning this frown upside down, right, by the end of the year. I think we really have, I mean, look at what happened today and yesterday. You literally have the market moving like 5 or 6% the week before. So as quickly as this happened, given all the underlying things, it could quickly be reversed. So we could literally have a decent year in the second half that we thought it was going to be a year to nail it, but it's not going to be a 20% year, okay? Here's where we are today. I mean, again, it's hard because this is as of maybe 2 days ago. S&P's down about 11%. It's probably down about 8, 7 now. That's how quickly it can move. The 10-year was about 4.30. It's kind of there. That's the one I'm talking about. So this is your choice right now. You can go get this and get 4.25%, and not have to worry about anything. Or you could risk your money and maybe lose 10, maybe gain 10. We'll see. But at the end of the day, the yields are higher because inflation is still high. We still have elevated inflation. It's coming down. We've had 2 good months of good data. We'll see if it comes down more. But you know, the tariff stuff isn't helping it because people are saying it's going to increase inflation. I don't know if that's actually going to happen. Here's my look on tariffs. Listen, people run businesses. Okay, there's a lot of costs that go into running a business. Okay, there's people costs, there's fuel costs, there's buildings that you got to pay for, insurance, energy, all of this stuff, right? So just because somebody says we're going to put a 25% tariff on you, doesn't mean you're just robotically going to slap 25%. You may save some money on insurance, you may save some money on gas or personnel costs or whatever. There's ways you're going to probably, your first inclination, if you're a good businessman, is not to raise prices. You're flexible. So I don't know how tariffs are ultimately going to affect us, if they affect us at all, or it's just like a big scare tactic to get us worked up. The Fed funds rate is still really high. I don't know if you guys have heard, but Trump's been going pretty hard at Jerome Powell. He's been saying he's going to fire him, but then he finds out that he can't fire him. He's not going to fire him. You know, it's all good. JJ's my buddy. I don't know. You know, it's beginning to sound like a really bad sitcom from like the 90s, right? Jay and Don. You know, it's like a bad cop show. Okay. Oil, that's a good one too, right? Remember, you guys recall, I don't know what gas got to down here, but in 2022, I remember driving my son to West Point for his freshman year, and I did a deal with my team. I said, listen, I'll take a picture of every gas pump I fill up at on the way from Kansas to New York. And it was miraculously and eerily all the same. It was like $4.95, $5.05. $5 across the way. That was crazy, right? And that's like, you know, obviously things are crazier in California and other places where they have other inputs, but it's good to see that oil and gas have come down some. I mean, we're still a little bit elevated, but hopefully when some of the energy policies take effect, maybe we might get down about 75 cents, and I think that's going to help, right? I think that one of the reasons why prices continue to be high is because we haven't had consistent energy policy, right? And the fact of the matter is, it's like if I'm a business owner, I'm not going to lower my prices because I don't know what I'm going to pay for gas or oil or energy without it being dependable. And we've had this kind of like up and down. Do I convert to green? Do I do this? Do I do that? What's the latest? So hopefully that also helps, and I think that's also going to help beat down inflation a little bit as well. Okay, so remember what we talked about. Okay, how many folks here think that there's literally 24 hours worth of 24 hours. How many think that there's 24 hours of news a day? Man, news. We're talking about news. New information, not opinions, not. So the lady that raised her hand, I got some things I need to tell you. All right. Here's the way I look at it, okay? There's probably 15 minutes of actual news. 5 of which is weather. The other 3 to 5 minutes is sports. The rest of it is something that genuinely happened that we didn't know. The rest of it is all opinion, it's all marketing, it's all meant to put you in this cycle, right, of like euphoria, depression, and when you get depressed, or you get too euphoric, you make mistakes. You make bad mistakes. And sometimes, well, not always bad mistakes, some of them are innocent, right? Somebody, you may end up buying, I don't know, what's that little contraption that I saw the other day? It's like a little mini air conditioner you put by the side, okay, do you really need that? I mean, you got central air, I don't know. You're depressed, and you're like, man, it's like I could really use that stationary bicycle pedal thing, or pillows, or whatever else, crap there is. But anyway, but that's what they're there for, right? They want to put you in a place where they want to make you buy stuff. And so if you're spending your time, by the way, you're hopefully, who's retired here? Everybody? You're not retired yet? You're working on it? Okay. Here's my advice, again, probably coming from me, this isn't going to be news to you guys, but it's 2025. You guys live in the most advanced society in the history of humankind, okay? You have assets, because you've hired a financial advisor that's handling it for you. Hopefully you have your health, and you have time. Why do you want to fill that with stressful, stupid activities that just make you worry, pull out your, get you pissed off, and put you in a foul mood, right? And that's what the media is there for. It's meant to manipulate you, okay? When we get into these cycles, when we make bad decisions, and we make silly decisions, and we run up our credit cards, and we run up our debt, and we're miserable on top of that. There's no amount of stuff. If they dig a hole, an emotional hole in your chest, no amount of stuff will fill that up, okay? You may feel good for a minute, but there'll be something else. So, we need to get to the point, I'm not trying to get all Buddhist on you guys. Because I'll be the first one to tell you that my wife says I get like really worked up about a lot of stuff, right? But in defense of me, I have to do it. So I'm kind of bearing that cross for you guys. But I do. I literally watch that stuff, and I sit there and I laugh, and I'm like, this is so stupid. Because it's always like, market sell-off, or there was like market rally, and it's like, if you went by that, you really literally thank God the windows don't open anymore. Like they did in 1929, people can leave out the window. They're actually like solid, so like all you'll do is like probably hurt your shoulder trying to back out of that. So which would be another problem, right? Okay, so remember we talked about my dad, right? So we can talk about there's options, right? When things go bad, you can do something, and we're up there from the generation where our parents told us, hey, don't just sit there, do something. Don't just sit there like a lump looking, just do something. Okay. Well, I would argue that there's a third part to that. There's do, don't, or just sit back. Okay. Or yes, no, or just sit back. And so what would have happened is, if you were fortunate enough to miss the 50 worst trading days from 1988 to a couple years ago, you would have gotten a return of 19.9%, 20%. If you were misfortunate enough to miss the 50 best trading days, your return is 2.5%. If you did nothing, just let that 75% work for you, you got over 10%. So, if folks are familiar with the concept of market timing, do you guys know what market timing is? For those that don't, you pick where the market's going to be bad, you get out, at the bottoms, and then you at the tops, and you get out at the bottom. So you can actually pick the market top to cash out in, and then pick the market low to get back in. So theoretically, you're gonna sell high, buy low. I don't know anybody. So it's a two-step process, right? It's knowing when to get out, when to get back in. I don't know anybody that does one part of that consistently. Okay, let alone two. Let alone 50 times in a row. Okay? So think about that for a second. You've got something that's slow and steady and gets you ahead with patience, or you can spin the wheel, roll the dice, flip the cards. What does that sound like? It sounds like gambling to me, right? And that's something you don't want to do your financial future. So to me, it's like, it's almost better, set a goal, set a plan, and just ride it out, okay? Here's another example of what happened. So we live in this place here. This is the short term. Everything, you know, you react to everything around you. You know, there's stuff going on, I react to it, you know, that's kind of what we are, right? Because, I mean, you can't, you know, we're wired that way, right? As a species, right? You can't, like, sit down and you look at a bear at the outside of your cave and you're like, hey, I'll get to it later. No, you need to, you know, take action. So we're pre-wired that way, so this is what happens, right? And in the course of things, we have volatility. Markets go up, markets go down, crises happen, this, that, and the other. Well, guess what? You know, if you live here, you're always going to be making mistakes. You're going to be getting out down here, you're going to be getting back in here, and you know, you're going to blow your long-term prospects. Okay. Folks are familiar with a gentleman named Benjamin Graham. He was one of the fathers of like value investing. And he basically said, and this one resonates with me all the time. He says, in the short term, the market is a voting machine. We like things, we don't like things. But in the long term, it's an adding machine. Okay. So if you think about it, here's volatility, you know, year one. 5 years later, it's dampened, right? The highs and the lows over that course of time kind of soften, and they continue to get smaller and smaller and smaller until virtually by about year 20, there's virtually impossible to lose money because you stuck with the plan. But if you were here, God knows where you would have ended up if you were buying here and selling there and going back and forth and whatever. You're not going to end up in this place. So that's kind of one of the reasons why I think it's important to look at things over the long term. The other thing to be mindful of is a concept called diversification, and the way I describe diversification to people is you have to have something in your portfolio you hate. That's true diversification. How many here have more than 2 or more kids? I was going to say it's controversial because it's for me. Like, I don't love my kids equally. Right? Is that too much? You only got one yet. You'll get to my first one. All right, so my daughter, she can do no wrong. This kid is great. She's got the first dime I ever gave her. She's considerate. She calls mom all the time. You know, they do things together. She's a great, you know, like very, very, very thoughtful angel. 90% of the time, she's my favorite. My son, I don't know. I'm still holding out that I'm going to get a DNA test and find out. This guy will take, you know, your wallet, spend your money. You know, I think he's destined for special forces because he lies and he like cheats and he's finagling. I mean, perfect material for spies. But anyway, you know, but the fact of it is, he doesn't let me down sometimes. You know, sometimes actually, like, things happen and I'm like, man, I'm really glad he's on my side. So it's kind of the way you gotta look at diversification, right? Not everything in your portfolio is stocks. Although, the market, to get us in a crappy place, that's all you ever hear about, right? How often do you hear a news segment on financial television when they talk about, hey, here's the benefits of your annuity, and it kind of stayed steady, and there's really nothing to see here, folks, move on. It doesn't sell pillows, and it doesn't sell comfort, what is it, relief factor, and supplements, and beet juice, or whatever they sell. The point of it is you have these things in your portfolio, right? So yeah, if the stock market's ups and downs upset you that much, you shouldn't really be in the stock market, but hopefully you can weather the storm. You know, who believes here that the market is going to be lower 3 years from now? I don't know. I think we're going to be probably 70,000, maybe even, you know, S&P 10,000 in 3 to 5 years. But the fact of it is you have these things and we forget about them because, like I said, when we worry, we get into that really like narrow mental state, right? Where it's like we go from being a fine-tuned, dimmer, brighter thing kind of on the wall to, you know, a light switch, on or off. And we forget about these things, but then when you look at it, the market's down 10%. Well, if you're 100% in the market, you're going to be down 10%. But if you only got 3% in the market, you're only down, you know, 10% of that 3%, or whatever. 50%, say you're 50% in the market, you're only down 5%. So be mindful of that, okay? Here's why it's difficult. I've had people tell me before, I'm diversified. I have 5 different, S&P 500 funds. You're not diversified because you have 5 different funds that do the same thing. So this is why it's so difficult to pick winners. There's no consistency. This is from years, from 2000, from like 20 years worth of returns. There's no consistency. If it was, it would be really simple. You just invest in the red stuff or the orange stuff because it never goes down. The problem is, the orange stuff, the red stuff work here, and guess what? It didn't work down here so well, and it's kind of middling here. So this is why you need to have, that's why you need to have diversification, in my opinion. You can't really play that game of trying to outsmart everybody. But with the caveat that if you were in an industry and you're really, really familiar with it, you maybe could do some stock picking on your own, right? Because I really know the pharmaceutical industry, or I really know the aerospace industry, or whatever it is that you may have done prior. But just you as a random, retiree investor that doesn't have any kind of special insights, it's a fool's game to try to win. We don't even try to do it. So here's the PSA. I know I said a lot of bad things about airlines, but I think it's an apt analogy here. So here's you guys flying the plane, right? And then your advisor, Adam and his crew are sitting there and they're helping you guide you on your journey, right? And it's not a question of, I need 10% a year. That's not how this should work. The way it should work is, how many folks here go to Starbucks? Good. Besides the price, what pisses me off about Starbucks is the fact that they want me to learn stuff. Okay? I don't care what you call a medium in your little world.
Yeah,
it's a medium. It's a large. That's what I want. Don't call it vente, short, squat, whatever the heck you call it. So I won't go. But so in this period, in your retirement period here, right, this is the time for you guys not to have to learn what a buffered note is, or an ETN, or any of this nonsense. All you have to articulate to your advisor is that here are my goals. These are the things that I want to accomplish in retirement. This is how I want to live. These are the things that I want to do. I want to fund my grandkids by 29. I want to build, a summer home or whatever. Whatever those goals are, that's what you owe it to them, and then they'll put a plan together. And then the other thing is when you get nervous behind the wheel, like we've been having the past couple of months, they're sitting next to you to slap you on the side and say, hey, listen, get a grip. You decided that we were going to do this, and we were sober. So unless something's changed, keep it on course, work the process, okay? This is one of my favorite ones, and then we'll wrap up here in a second, but anybody watch soccer here? Good, that's even better. You watch soccer? A little? Okay, well, funny story. So a lot of my relatives, I'm Greek, so a lot of my relatives still live in Greece, and you know what they're amazed by? They're amazed that I can catch stuff, okay? Because they don't do anything with their hands. It's all like, so like, they'll throw me stuff and I'll catch it. They think I got some kind of like monkey or something because it's scary. Anyway, different places, different sensibilities. But so a European guy did a study, and he decided to see how many times during a penalty kick. You guys know what a penalty kick is, right? It's basically point blank. That goal is about twice as wide as this hotel. You got one little guy there, and he's like, he's basically like, the ball is like where that table is. It's impossible to stop the kick. Okay, that's why they're so successful. So he decided to find out how many times the kick went to the right, to the center, to the left. Guess what he found out?
Center.
Equal.
Third of the time, it went to the right, to the center, to the left. Okay, but. And I'm sure that was probably something that was funded by our government. So guess how many times this guy, knowing that it went a third, moved? 96% of the time. So what does that tell you? If he just stood there like a like a pole, he would have stopped at a third of the time. But because he moved, he was pretty much, putting himself in a situation where he was only going to be successful 4% of the time. So this is the power of doing nothing, in my opinion, and sticking to your plan. Now, I know it sounds like a bad thing, do nothing, right? We want to be industrious, we want to be productive, but this is one of the few times in life where doing nothing and sticking to a plan that you are comfortable with should work for you a lot more often than trying to figure out which way the ball's going to go. And the other interesting thing to be mindful of is that, they're here, in a lot of ways, they're kind of like your financial health care provider, right? If you're uncomfortable, you need to pick up the phone and call them up. Say, hey, am I on track? Yes, you are. Okay, hang up the phone, go about your business. But if you're uncomfortable, then you need to rework the plan. And I think a lot of people just, they get hunkered down and they see all this negativity and stuff, and they realize that, they feel bad, they feel like they need to do something, and then that's when you make financial mistakes. So that's all I have for you guys. I'll be happy to read in my best Shakespeare in English the disclaimer that compliance makes me read, but I actually have it tattooed on my back, so for those interested, I could show you that later. But yeah, I'm happy to answer questions, or thank you for coming out, thanks for having me. So I appreciate it, and I'm happy to answer questions.